Good morning, everyone. Hope everyone's having a wonderful Monday. Welcome to the first video of the week. Today has been quite boring. As you can see, the markets have only gone up by 0.08%. Massive increase. Only kidding, it's only gone up by very little amounts, and it's been quite stable in the weekend between the 1.7 and 1.8 trillion mark. We see Bitcoin not going up at all. We cannot consider these to be changes. XRP went down by 3.13% and Terra went up by about 7.5%, which are significant increases compared to the market in general. Dogecoin, it went up by about 10% following Elon Musk's tweet earlier, but then quickly saw a drop back to the prices that they were on Saturday and Sunday. The markets are moving laterally. Some coins are going up, some coins are going down. Bitcoin dominance, it's still at almost 43%, if you can see here, and this is still a very strong sign that people are wary, people are being risk averse and not taking big steps in investing in the markets. This is simply because the markets are uncertain, the geopolitical situation of the world is uncertain, so instead of investing in crypto, people are either investing in stocks or bonds or gold, or if they do invest in crypto, they will invest in Bitcoin or Ethereum, but more so Bitcoin because it is a store of value, and that's why we see dominance at such high levels of 43% when we were used to seeing it at about 37-38% in November and December during the bull run. Looking at the charts, nothing really much happened. If you watch my Thursday video, I said that the price of Bitcoin would be trading between 38,000 and 40,000, barring any sort of news that would cause it to pump it up or down below these support and resistance levels. There were no real news that happened, and there weren't any real geopolitical developments in Europe. So the prices were quite stable. They were trading between the $38,000 to $40,000 band. And if you can see here, it almost broke the $40,000 resistance band, but then the bears got in the market and they sold off and it went back down to 39,000. Similarly, it almost broke the support level of 38,000, but then the bulls came back and bought up the dip. So it is a tug of war between the bulls and the bears, and I think it will continue trading between these bands going forward this week, barring any sort of news or barring any sort of massive increases in leverage. And talking about leverage, I think people don't learn from previous highs and lows. Obviously, the price of Bitcoin dropped, and with it, the leverage ratio also dropped. But then I believe that people think that the prices have stabilized now and the only way is up, and that's why we see this massive increase in leverage from the weekend, and it's standing at almost all-time high levels. It's just, we can consider this to be all-time high leverages. This can go either way, right? If the price of Bitcoin goes up and people make profit out of it because they're mostly in the long position, then the price will go even further up. It can go up to 45,000. But if the price goes down and all of this new leverage in the market gets flushed out, then we can see the price of Bitcoin going further down than what they're supposed to. And that's what leverage does. It just over amplifies what's actually supposed to happen in the markets. Does your financial advisor speak crypto? So as of March 2022, there are more than 12,000 cryptocurrencies that facilitate peer-to-peer transfers of data and value. And where does this leave the individual who believes in the future of those crypto assets but can't figure out how to invest in them? So these are people that are interested in crypto but don't know how to put their foot in it, so they will speak to their financial advisors about crypto. What this article is basically saying is that don't expect any crypto buy, hold, or sell recommendation from your financial advisor. Even among investment advisors who like alternative assets that tend to move independently of your more traditional stocks or your S&P 500, you will be hard-pressed, or you will find it hard to find many willing to suggest putting a chunk of your portfolio into any of the cryptocurrencies. And there are a couple of reasons for this. One is because they're skeptical. They see this as a rush, as just another new fad in the financial space that has to play itself out before there can be any real guidance. Another thing is that it is a space that has no clear regulators yet. Mainly, some think that this is a fad, it's more of like a hype situation and it will die down. Others think that because there's no regulation, they might face some legal repercussion or some financial repercussion if they advise their client to invest in crypto. So we can see something here. If regulation comes into place and if there are clear guidelines on how crypto trading is supposed to be done and how financial advisors or third parties are supposed to act, then I believe that this will circumvent this skepticism. And I feel like at that point, with clear regulations, a lot more financial advisors will be willing to advise their clients to invest in cryptocurrencies. Also, your advisor might be trying to protect you. Advisor may be deeply knowledgeable about crypto assets, but they can't and won't provide any recommendations to sell any digital assets because their job is not to sell transactions, but to manage the client's money and their expectations. And a lot of the advisors just aren't willing to pass on the risk to their customers, especially due to the fact that cryptocurrencies are very volatile in nature, and at one moment you might be making 50% profit and in the next moment you're making 50% loss. Also, crypto scammers stole some $14 billion in 2021 because of the lack of regulation, because of no policing of crypto. There have been a lot of scams, and the advisors might say, hey, invest in this project, it looks good. It just might be that they are a scam, and obviously the advisors don't want that. So crypto advisors might not recommend you to invest in cryptos directly, but they might go for any alternatives such as Bitcoin-related stocks and companies with exposure to blockchain. This could include mining companies or Bitcoin mining companies. This could include companies like Tesla or MicroStrategy that have a lot of Bitcoin in their portfolio. Another possibility is Bitcoin futures. So this is betting on the price of Bitcoin going forward. And a final option would be cryptocurrency focused hedge funds. So they don't hold cryptocurrency directly, but they would hold products that have exposure to cryptocurrencies. So they might not tell you to invest in crypto, but they might tell you to invest in sort of an alternative to cryptocurrencies. And even with this, because it's still very risky, they might tell you not to put 5% or more of your portfolio into this high risk category. Dogecoin spikes briefly after Musk says that he won't sell any of his crypto holdings. So it jumped as much as 10% during Asian trading hours, but it got sold off and the 10% gains have been eradicated. And the 10% jump happened because Tesla CEO Elon Musk said in a tweet that he's not selling any crypto, which includes Doge. And this spike was mainly driven by automated trading bots that track token mentions from popular accounts on social media sites like Twitter. Obviously, Musk would be one of them because he has over 70 million followers. And this is very interesting because these bots are what's driving the prices high or low based on social media, based on mentions, based on news. And I think regulation might put an end to this. They might ban these trading bots from operating because it does constitute price manipulation and it will be a way to stabilize the price of cryptocurrencies and reduce the volatility. Ethereum co-founder Joe Lubin says that crypto is among Ukraine's best weapons against Russia. So far, at least $60 million in crypto has been channeled into the nation, and now this represents crossing the chasm into mainstream adoption. Before, it was all about adoption, and now crypto has been used for national security issues. It's been used to buy supplies, it's been used to buy bulletproof vests and other equipment. Also, Lubin predicted that crypto will be used in many different nation states, regardless of what other nation states say or do, and that means that every nation state has to create policy, get savvy, and start wielding these tools. And he predicts that crypto will become like an arms race. This country or that country may not like to make use of crypto. However, you have to be as capable with powerful weapons, and crypto is one, as your neighbors are. So if other countries are regulating and using crypto in conducive and in ways that are evolving their financial systems, other countries will also want to catch up. That's why Joe Biden the other day signed an executive order to fast-track crypto regulations in the United States because they don't want to stay behind. And this is what it comes down to. Because there's sort of like a crypto arms race going on, I think that regulation is going to come for most countries, and it's going to be competition between countries who can create the most crypto-friendly regulatory framework. Austin's mayor embraces Web3 tech and crypto payments. So Mayor Steve Adler of Austin, Texas, which is the fourth largest city in Texas, has fully embraced the discovery of what blockchain technology and crypto payments can bring to his city by proposing two new initiatives. The first of these is to ensure that Texas' fourth largest city, Austin, promotes the benefits of blockchain technology and promotes equity, diversity, accessibility, and inclusion into the technological ecosystem. And to that end, he directed the city manager to explore how the city can utilize Web3 and blockchain in 20 fields, from smart contracts, supply chain management, insurance, arts, fundraising, and ID verification. His second initiative is to order the city manager to conduct a fact-finding study of how the city could adopt Bitcoin and crypto-related policies. And one of these policies could be to accept the payment of bills with cryptocurrencies. Exciting, exciting, exciting times ahead. And Austin isn't the first one to focus on crypto adoption. And I think this is sort of also becoming an arms race in American cities because New York, Miami, and the whole state of Colorado are rapidly expanding exploration efforts and proposed implementation of crypto-related policies. Like Miami and New York have already released their own city token or city coin, and Austin's own program is still in development. So it is really, really good for the whole crypto ecosystem because an arms race, competition, whatever you want to call it, is always, always good for the end consumer, which is you and I. Finally, SEC turns away another set of spot market Bitcoin ETFs. They haven't changed their mind. Yesterday, the SEC denied yet another set of spot market Bitcoin ETF applications, this time from investment manager NYDIG and ETF provider Global X. And to date, they have not accepted any Bitcoin ETF application that's come up for its review. None of them have been approved. And this is because there is potential for manipulation and fraud. That's the reason that they're giving us. However, I think that with the pressures that are mounting due to the fact that we already have futures ETF, so why not release a spot ETF? I think it's only a matter of time before they release it. And I think this is why they're having a lot of applications for spot ETFs, because it's bound to be approved and everyone wants to be first. First mover advantage is real and is particularly real in the crypto industry. And with that, we come to the end of today's video. Thank you very much for watching. If you liked the video, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely and cheers.